This closed on the 4th of August, 2023. We'll do our disclaimer first, go over our calls, make some predictions. It's my trading plan for Monday, August the 7th. Trade at your own risk. I can be dead wrong. Look for the pattern with the early high, which is this. Monday's pattern should have the early low. We had a number of things calling for higher prices, and we had a target of 45.1938. We said we couldn't predict what would happen after the employment report, but we didn't get the gap down, so we got the higher prices with support at that level. Today's pattern generated a new target, 45.3504. I don't think we're going to see that. You never know, but I think we're going to wind up adding that one to the list. That's why we said increased risk of failure. This is normally a bullish pattern. Failure is a straight line drop, and that's a straight line drop. It's particularly ominous this happened on a Friday. Friday afternoon's the hardest time for the market to change a trend. Certainly retail customers aren't going to be anxious to shift gears. It's a sign that the big money is doing the selling. During the day, MEJT gave an ultimate buy signal early on. It's already printed. It says this drop is false. Here's the target. Should print it sometime. If we don't gap down, the rules say it prints Monday, but I wouldn't count on it. Well, here are the DeMark indicators that happened in mid-July. We said they indicated the market was overextended. They aren't pinpoint indicators of when tops come, but they tend to indicate the area of a top, and this time they seem to be working. The indicators are in alignment with the sell signal on the monthly chart. So this should lead to a substantial decline. The question is how much. We also got stopped by this trend line that we talked about, but we still haven't really undercut a significant low on the weekly chart, so it's a question of how low should we go. Well, I can't be certain about that, but here's the Andrews pitchfork from the October low. You can see how we've stayed in the bottom half, and we banged up against this midline. It would be consistent with this pattern if we traded to the lower trend line, which is just over 4,400. That's not a stop and reverse. It's a reasonable target. Doesn't mean it's the only target. It doesn't mean that we stop there, but I think it's reasonable to expect that at some point. Not a guarantee. I do have a bunch of lower targets. It didn't look as though these would print before we traded higher, but once the signal came, they're certainly put into play. And even though we could stop at 4,400, I don't have anything that requires it. I still think after the sell-off, we're going to go higher. And I'm not saying all these are going to print now. These are the patterns we should see next week. Monday's pattern has the early low. We could still gap up. There's a higher target. If we don't gap down smartly, the rules say it should print. I think it won't. When Friday's normally bullish pattern is bearish instead, should lead to more weakness, whether or not it comes immediately. Barring some sort of news event, the week Friday close nearly always follows through with lower prices if Monday's open, even if we don't close lower. Furthermore, we gapped up, hit a higher high, we closed under intraday highs, and even the intervening intraday low, and that's pretty negative stuff. The DeMark top indicators are in play. Wouldn't be surprising to see us trade in the low 4,400 at some time, and even if we don't stop there, I don't think it changes the bullish long-term picture. So this is negative stuff. I think it's unlikely we see this target. We have lower targets in play, but I think it's just a pause in the bull market, and it's just a question of how low we're going to go first. I think we are going to recover from this, but it might be a painful drop first. It's the pattern with the early low, and that's today's call.